Beautiful day to you. This is Ron Janish. We're going to go into a little more detail and answer some questions regarding how to select the best forex pair to trade. Okay. Well, what happened was somebody came up with this theory that if most of the currencies agree, most of the currencies of pairs effectively agree that a certain direction is eminent in a certain currency. In other words, let's say most of them are against the dollar, or most of them are for the yen, or most of them are against the Australian dollar, then hey, it's time to buy that or jump on that. The only problem is how do you know when most of them are there, and which one is most of them? Do you, if it's against the dollar, do you follow the Turkish lira against the dollar? Do you do the Russian ruble against the dollar? And what about these other currencies? You know, the Polish whatever, right? So versus the ruble, you know. So anyway, so there's all these different zillions and zillions of currency pairs that are possible. Okay, so what happened was there was a gentleman we connected with. We call him, and he likes to be called Lazy Leo. And so Lazy Leo has this website. It's called newlazy.com. And he wanted to make this as easy as possible for people. I mean, couldn't be any easier. So what he did was he ran a portfolio, and he picks out which, or his computer picks it out, which currencies to be long or short on each of the days, which currency pairs. And as we look on here, we can see that on June, let's go to June 17th. So on June 17th, he's the only thing he's really in, if you look here, Australian dollar, US dollar, and he's short. So the more it goes down, the more money he makes. Okay. So, and over here, the next day, AUD USD, it says 0. That means he's out of that trade, and his profit was 113.70. That's pretty decent on somebody putting out $10,000 on a day or two. That can work. Okay. So now what Lazy Leo says basically says, look, people have a hard time figuring out when something's in a trend or going in a direction, except if they're on a one-way street. Because on a one-way street, you just look at the way the traffic is going, usually the same direction as the arrow, no problem. Otherwise, it can be a bit confusing if it seems more like a dirt road. And let's face it, the currencies, you've got a whole bunch of these things traveling. So it's like a whole bunch of cars traveling around in a field, you know, kind of like a demolition derby. So you don't really know. So anyway, what he says is really simple. He says, look, you look on here and you see if there's three that have the same currency name to it, and then make sure they're in the same direction. So for here you have AUD NZD, and that's saying down. So NZD, okay. GBP NZD saying down. Okay. NZD USD saying up. Well, if you flip this around, you'd have USD NZD down. So you effectively have three in a row, or three of the same currency go in the same direction. Hey, works. Okay. So anyway, as you can see here, he got into these trades, and you can see what happened as a result. He says, you know, you stay with it until you only have two or one, you know, or none, you know. So over here, let's see, he still has NZD USD. He's still there. He's still there. And over here, he's getting out. Is he getting out here? No, he's still in. Does he get out here? Well, I don't know. Let's take a look. Ah, Okay, so here we go. He finally got out of one of them. Okay, so it's time to just, hey, say the heck with it and get out of everything. So no matter which one you picked, he's only in two of them. So the strong trend for NZD, New Zealand dollar, is over. So let's take a look and see what happened. Okay, so here it was 66. He got out, and this guy was 137. Okay, and NZD, UZD, oh, that went up a little more. So, okay, so anyway, when you only have two, well, you no longer have three. So he likes to get out he doesn't have when he doesn't have three. Okay, so anyway, so things this seems to work reasonably well. So this morning we see JPY all over the place, and we see it on the right-hand side of the pairs, and we see negative numbers. So they're all pointing the same direction. And so we have four different ones, not just three, but four different ones saying, hey, down we go. So I don't have this set up on my computer, but I just looked at his, and apparently this number here, that's $3.14, this future profit and loss, is now close to $200. So all these here together as a combination wound up doing reasonably well. So our next currency pair that is the focus has the Japanese yen in it. Now, which one exactly you want to trade and when you want to put a trade on and when you want to take it off, that's risk and that's really up to you. Okay, whichever one you're more comfortable with, because you might want to have a certain pattern or a certain something or other. But generally speaking, if you have JPY in the mix on the as the second pair, and down we go, then like you do here with USD JPY and GBP JPY, then the theory is that things will go well. So in a few days from now, today is July 2nd, it's noon right now in California, which means about an hour before New York market closes. And this means that in a few days or a week or so, this Japanese yen trade will be over and done with. Okay, so this does leave you the room for creativity and deciding stuff and those kind of things. So you go ahead and measure whatever it is you feel you need to measure in terms of risk reward. One person did the study and said, well, what happens if while he's long or short, whatever his favorite pair is here, or his favorite pairs, you just get out a little bit before market close, which in California is 2 o'clock, and on the forex, and get back in when it opens up again. And you can try that if you like. This way you don't pay the interest charge, so it's really up to you. Okay, but you get more commissions, so you gotta watch that. Anyway, play with that a little bit. Do what's right for you, and just come back on a daily basis and see what he's doing. Right? See which ones are there. Now here's a chart which shows you what the total is. You see that chart up there, and that reflects if you add forex cash with UPL and this number here. This is what you wind up getting. Now, let's talk about margin, okay? What Leo uses here is something called Thinkorswim. Okay? And Thinkorswim, they automatically have a buying power margin, performance bond, whatever you want to call it, with a leverage of about 20 to 1. for most pairs, except for ones that are like incredibly liquid, like the dollar versus the euro and stuff like that. So, and for them, they do 50 to 1. So if you look over here, you see the calculation as to how much buying power is used. Okay. And typically what you notice is Leo uses less than 10% of the necessary or available buying power, which means his leverage is only about 2 to 1. That's why he makes such little money. I mean, this is being done with a $10,000 account. And, while, yeah, he's up around 10% in just a few weeks or more, it's not a whole heck of a lot. But then again, it doesn't go down a whole heck of a lot too. So there's less risk and less opportunity and less risk. Anyway, this is Lazy Leo's little project, and you got any questions? Well, just send them in an email to mailbox@sant.rr.com, and Leo and I will take a look at it. All right. Hey, thanks. Have a good day. Bye.